Almost everybody thinks that life insurance can only pay out after you die. But this is a huge misconception, and this misconception could honestly cost you thousands of dollars. Now, there's a type of life insurance that most people don't know about, and it's called life insurance with living benefits. It's a type of life insurance that can actually pay you while you're still alive. How this usually works is if you get hit with a qualifying illness, the death benefit or part of the death benefit would be paid out to you instead of your family while you're still alive. So this is huge because in today's age, as younger people are getting hit with illnesses such as cancer, heart attack, or stroke, having something like this is like an emergency safety net that can go a long way into helping protect you and your family. So why is this so important? Well, the biggest thing that will happen to you is, let's say you're 30 years old and you got a 20-year term and you're getting older. If you were to get hit, let's say, with a heart attack, while you still have your term policy active, the biggest stressor you're going to have is financial stress. Most of the time, a lot of the younger people who are getting hit with a heart attack or getting diagnosed with cancer or stroke, they are surviving, the treatments and whatnot. But when you do get struck with, let's say, a heart attack, you're going to be out of commission. I mean, you're not going to be able to go to work. If you're not going to be able to go to work, money's not flowing in. So how are you going to pay your bills? How are you going to pay your mortgage? If money's not coming in, how are you going to live? How's your family going to get by? Well, if you were to have just a traditional policy, then you wouldn't actually be able to do this. But if you had a life insurance policy with living benefits, you could tap into some of that death benefit and have it paid directly to you. So if you got hit with that heart attack, you may be out of work for maybe a couple months. You may need to recover during that time. But once you apply with your insurance company and they take a look at the diagnosis and everything, and once it qualifies, you'll get paid out a certain percentage of your death benefit to you personally. And that money, this is the biggest part, that money can be used for whatever you want. You don't have to spend it for medical treatment or whatnot. It's probably best for you to spend it on bills or anything that was accruing, but truthfully, you could spend it on whatever you want. It's money that goes to you. And your death benefit of your life insurance policy will be reduced by a certain amount thereafter. So you'll still have your, life insurance policy, but you'll get to have some of the money forwarded to you before you die, which is a good thing because if you've been paying into this thing, you can actually make some use of it so that your family doesn't face financial ruin. And this can happen with both a term policy and a whole life policy. So it's with both. So you don't need to have something like a whole life or an IUL in order to be able to make use of this. You can have a term policy and still be able to make use of this. So in my opinion, this is a no-brainer. If you're going to have a term policy, you're going to want it with living benefits. If you don't have it with living benefits, you're really taking a huge gamble that nothing's going to ever happen to you and that you're always going to be financially stable during this time period where, maybe you got a couple kids, your kids are very young and you're still growing. And unless you're super healthy and you haven't had any issues in your family before on any type of diseases or sicknesses, then maybe you don't have to worry about it. But for most of us, this is something that will very much help you get that safety net that if someone were to be hospitalized or needs some, therapeutic treatment that costs an arm and a leg, you can tap into your life insurance policy to help pay for some of that or just keep you afloat until after your treatment is over, you've recovered, and you can actually go back to work and you can become more stable in your health. So take a look at your policy, see if it has what's called either a critical illness rider or a chronic illness rider or even a terminal illness rider. All those things can help pay out some form of money to you while you're still alive. And if you don't have it, just know you can't make use of the living benefits that I just described in this video. Most of the time, people don't even know that this exists. They feel like they have to get a whole life policy in order to be able to pull money out of their policy. But in this case, even a term policy can allow you to do that. So if this video informed you and you learned something that you didn't know before, please give a like and subscribe and give me a comment down below if you got any questions. I'd be more than happy to help you with them. Thanks so much.